Okay, dear students, this is Mustafa Mirchawala from Mirchawala's Head of Accountancy, and now we are doing one more class of pre-mock F6 pre-mock March 25, that is related to individual taxes. Okay, it's a 15-mark question now. So let's start without wasting any time. Let's start. I have also, let me inform you, I have uploaded more questions for F6, F6, F7, FR and SBR. A lot of past papers are there on YouTube, so it's really very beneficial. You can share with your friends as well, so many students are getting benefit from it. Okay, so let's start. So Ellie, you can see the screen. Ellie was employed by Vector Limited for many years. On 30th June 2023, see 30th June 2023, Ali resigned from her employment with Vector Limited. That means she left this existing employer, and from the very next day, she started a new employment with Matrix Limited. Okay, so as we all know that employment income is always calculated. Employment income is always calculated for fiscal year. So your fiscal year is 6th April 23 to 5th April 24. Okay, so if I round it off, so April, May and June, these 3 months, these first 3 months, this lady Ali worked with Vector Limited. Then from July, August, September, October, November, December, Jan, Feb and March, these last 9 months, she worked with Matrix Limited. Okay, but keep this concept in your mind that employment income is always calculated for fiscal year. So this is the fiscal year. First 3 months she's working for Vector Limited, last 9 months she's working for Matrix Limited. But we have to solve for this employee. An employee has to work for the fiscal year. So first 3 months we'll take data from Vector Limited, last 9 months from Matrix Limited. In this way, our complete fiscal year will be done. Okay, right? Now, don't forget this thing. First 3 months, Vector. Last 9 months, Matrix. First 3 months, Vector Limited. Last 9 months, Matrix Limited. Don't forget this thing. Okay. Now, what they are saying, Vector Limited LE's annual means 12 months. Annual means 12 months. Salary is 68,000. So what you will do? Definitely I'll be solving on the spreadsheet. 68,000 into 3 upon 12, because this is annual salary and she worked only 3 months. She worked only 3 months for Vector Limited in this fiscal year. Okay. Then Ellie used her own car while working for Vector Limited. During the tax year 23-24, she traveled 1200 miles, for which she received an allowance of 40 pence per mile from Vector Limited. Okay, so hope you remember this mileage allowance thing. So there are two things in this. The first thing is amount received. So amount received is 1200 miles multiplied by 0.4, which is 480. 1200 into 0.4, which is 480. This amount she received from employer. Now, whenever you drive your own car for the business of employer, so definitely this car will be depreciated. There are other costs as well. So tax department says we will not be allowing you any actual cost. We'll just allow you mileage allowance. So how to calculate mileage allowance? Mileage allowance for first 10,000 miles is it's 45 pence per mile. It's 45 pence per mile. So first 10,000 means 1200 comes under 10,000. Okay, so 1200 into 0.45, this makes I think 1200 into 540, right? So 480 minus 540 is, yes, 60 negative. So simply what you have to do, I taught you in 2 steps. You can directly do in 1 step, like minus 60 will go in the employment income. Minus 60 will go in the employment income. Okay, so that's it. That's it for the Vector Limited. First 3 months done. First 3 months already done. Let me tell you one dodge. Do not prorate. Do not prorate 1200 miles because the 1200 are the actual miles for the 3 months. Already it's these 1200 miles is for 3 months. So never apportion this 1200 miles. Okay. But yes, the salary, read the note number 1. The salary was given annual. Annual means 12 months. So that's why I apportioned it into 3 upon 12. Okay. So be careful with this sort of dodge. Now, one more thing. In this question, they are saying that she left the job from Vector Limited and joined another company. So hope you remember my lectures. Whenever an employee leaves the job, she receives a form P45. Form P45 she receives from the existing employer and she gives that form to the another employer. Okay. So there is a possibility that you will be asked something related to form P45. Form P45, make up your mind. Form P45, make up your mind. Okay. Now, let's discuss the last 9 months. Ellie's Ellie's gross annual salary with Matrix Limited was 82,000. So once again, this is annual salary and she worked only 9 months. She worked only 9 months. So we'll be doing 9 upon 12, 82,000 into 9 upon 12. Easy marks, easy marks. On 1st October 2023, be careful with this date. 1st October 2023 means only 6 months left. October, November, December, Jan, Feb and March. Only 6 months in the fiscal year. Only be active with the dates. Keep your eyes big, open. LE was provided with a hybrid. LE was provided. That means employer provided car to employee. So it's a benefit. It's a benefit. It's a benefit. LE was provided with hybrid electric company car with a CO2 emission of 40 grams per kilometer and electrical range of 35 miles. Hope you remember the lecture I taught you. Let me show you the list. The car had a list price of 37,500. All private fuel was paid for by LE. Okay. So that means no fuel benefit. No fuel benefit because employer did not pay a single penny for this fuel. So only car benefit will be calculated. Only car benefit will be calculated. Okay. Now wait, let me show you one picture so that everything will be reminded. See the range. The range of this electrical range is 35 miles. Okay. So this is the picture. Hope you remember my lecture. See, this is the picture. If the CO2 emission between 1 to 50, yes, the CO2 was 40. The CO2 was 40. That means between 1 to 50. And the electrical range is 35. Electrical range is 35 means between 30 to 39. So in this question, 12% rate will be used. In this question, 12% rate will be used. Be careful. You need to learn this list. You need to recall this list. This list must be in your mind. This list must be in your mind. Okay. Now, so how we'll be doing it, I'll also show you in the Excel. So it's going to be 37,500 into 12%. 12% means for the whole year benefit. And she received the car on 1st October. 1st October. So October, November, December, Jan, Feb and March into 6 upon 12. Okay. So this will be your car benefit. This will be your car benefit. I'll solve everything on the Excel. Don't worry. Don't worry. Now, accommodation benefit is here. Number 3. Matrix Limited provided a flat to Ellie to live in from 1st July. That means the day she joined the employment, that is 1st July 2023, she got this house. So 1st July to 31st March, only 9 months. Only 9 months benefit. Be careful. Only 9 months benefit means the annual value benefit will also be apportioned plus additional benefit will also be, both benefits to be apportioned. Be careful. Be careful. The flat was purchased by the company. Company means employer on 1st August 2016 for 250. This is the cost and had a market value of 1st July 2023. Now wait. You remember for additional benefit, always find the gap. Always calculate the gap. So the gap is 2016 to 2023. So it's almost 7 years. It's almost 7 years, or I would say more than 6 years. It almost 7 years or more than 6 years. So it's greater than 6 years. This gap is greater than 6 years. So in this case, we'll be using the market value at the date of transfer. So 300,000 will be used. Okay. Now one more irrelevant information. The company spent 15,000 on improvement on this date. See 2020 here. Company spent improvement on 2020. So this improvement is irrelevant because in this question we are using market value of 300,000 here. The market value of 2023. Okay. So now what's the law says? In this question, we'll be using market value plus all subsequent improvement before the fiscal year. Okay. So no more further improvement is there. So for additional benefit, we'll be using market value. For additional benefit, we'll be using market value. Okay. I hope you remember the formula for additional benefit. It's going in for this question. It will be 300,000 minus 75,000 into official rate of interest, which is 2.25%. 2.25% into 9 upon 12 because into 9 upon 12. Why? Because the benefit is provided only for 9 months. Okay. Now the annual value is 6,500. Yes, you need to apportion this as well. You need to apportion this as well because in this question you are provided house for only 9 months. You are provided house for only 9 months. Are you getting? Are you getting? Now the next thing is, don't worry, I'll be solving everything on the spreadsheet as well. Now the next thing is now the next thing is loan benefit. Easy. Loan benefit is easy. Matrix Limited provided LE with an interest-free loan. Interest-free loan means 0%. So the market rate for, in our question, 2.25% is the official rate of interest. 2.25% is the official rate of interest. So 2.25% minus 0%, which is the actual rate paid by employee. So the benefit rate for this question is exactly 2.25%. So we'll be calculating loan benefit for 2.25%. Okay. Now they are saying it is given from, the loan was given right from the first day, that day she joined the employment, she got the loan, that is 1st July 2023. No repayments were made. That means throughout last 9 months, the outstanding loan, the last 9 months outstanding loan was 15,000. See, multiply by 2.25%. This is the benefit rate into 9 upon 12. This is your loan benefit. That's it. This is your loan benefit. That's it. Nothing else. Nothing else. Even if you want to apply the average method, this is the accurate method. This is the accurate method. If you want to apply average method, you will get the same answer. Why? In the average method, what you do? Opening outstanding loan plus closing outstanding loan. So opening outstanding loan is also 15,000. Opening outstanding loan is also 15,000 because at the beginning of the fiscal year, there is no loan. So we'll take the last loan, that is from 1st July. So opening outstanding loan is 15, closing is also 15. 15 plus 15 divided by 2 is again 15,000 into 2.25% into 9 upon 12. So whatever, listen, whatever method you want to use, you will get this answer. This is the real answer. So 15,000 into 2.25% into 9 upon 12. Now my dear students, why did I use the rate 2.25%? Because it is written in the question. See the screen. It is interest free loan. So 0%. Employee paid 0%. And the official rate of interest is 2.25%. So complete amount of 2.25% is the loan benefit. Okay. Now they are saying, the last line is very important. Matrix Limited will payroll elites benefit. So benefits means non-cash benefits. Listen. For non-cash benefits, you have two options. Now you have two options since last few years. The first option is P11D form. P11D form. If you go for P11D form, you have to pay taxes at the end of the fiscal year. All the benefits, all the non-cash benefits will be accounted at the end of the fiscal year. The second option is you join the pay as you earn club. You join the pay as you earn club. And now, listen, now Like pay, you know what is pay? Pay as you earn. Like pay, every month your employer will deduct your tax. Every month employer will deduct your tax, and employer will pay to tax department by deducting it from your salary. So every month's, like on cash salary, every month you have to pay. Similarly, now on non-cash benefits, you have to pay tax every month. But now what is the advantage? The advantage is gradually every month you'll pay tax. So at the end of the fiscal year there will be no more surprises. At the end of this fiscal year you will be relaxed. You will be relaxed that you have almost paid the tax on non-cash benefits, so no tension, right? There will be no more surprises. But what is the disadvantage? What is the disadvantage of this payrolling? This payrolling means this pay. Disadvantage is now you are paying tax early. Every month you are paying. Otherwise, if you follow P11D self-assessment thing, P11D form self-assessment thing, then you have to pay at the end of the fiscal year, like easy 12 months later. So that's the disadvantage of payrolling. But the advantage is smoothly you can pay every month, tuk, slow, you can pay. And there will be no more surprises at the end of the fiscal year. So both things are there. Now, they are giving you other information. So I have just discussed the proper employment income thing, first 3 months and last 9 months, first 3 months Vector Limited, last 9 months Matrix Limited. Stay strong, not difficult. You guys know tax, you have taken the classes, please. Now what about other information? There is a dividend income, easily it will go in the dividend column, 1500. And elite made a per see elite made sorry Ali made contribution to her personal pension scheme of 4000 gross. Very simple. If a person is doing gross personal pension contribution, it's not an allowed expense, but yes, it increases your band. It will increases your basic rate band. It will increases your basic rate band and the second band. Okay, right? This 4000 will increase your band, and also you do ANI deduction, but normally it's not needed. Normally, sometime it's not needed to discuss. Okay, so in this way, normally your first band is 37,700, but now this gross PPC, this will also be your TRC, tax relief contribution. If you have studied pension from me, hope you remember, this is your TRC, tax relief contribution as well. So 4000 you'll increase the band, it will be 41,700. Your updated first basic rate band will be 41,700. Don't forget during the tax calculation. Don't forget during the tax calculation, my dear student. Okay. Now, I know this first 11 marks is purely the spreadsheet requirement. So I'll go to the spreadsheet. Don't worry about it. Don't worry at all. But first, let me cover these two theoretical requirements so that we won't be able to come on this screen. We'll be on the other screen then. So, good marks. Set out briefly the content and purpose of the pay form P45. I told you the form P45 leaving form. Okay. While leaving the job, in the class we have discussed, which Ali received from Vector Limited when her employment with the company ceased. Okay. Write 2 marks you need to write. It contains your pay, how much tax you have paid, and you need to take it from your existing employer. So let me show you. I have written some points for this. You see, this is requirement B. The P45 form will show Ali's taxable earnings from Vector Limited up to 30th June 2023. Definitely she worked till 30th June 2023 with the existing employer, so definitely when you leave the job, you receive this form from your existing employer. Okay, and the amount of tax deducted along with her pay. Okay, so this is the 1 mark thing. 1 mark you got. A copy of the form should have been given to Matrix Limited. Yes, in my class when I teach form P45, sometimes I say, just to make you guys understand, I sometimes say that form P45 is like experience letter. form P45 is like experience letter, right? Okay. A copy of the form should have been given to Matrix Limited to enable them to correctly calculate Ali's pay for the rest of, oh, obviously you will give this form P45 to your new employer, she will enter your codes, she will enter your detail in the tax department system. So the new employer will connect to the tax department with your details, and the new employer can then pay the pay accordingly everything. Okay, so this form P45 is helpful, definitely helpful for the new employer as well. So these 2 points, yes, we have covered this in the class as well. Now what is the second thing? The second thing I've already discussed. State one advantage I have already told you, and one disadvantage of LE of Matrix Limited for payrolling her benefit, payrolling. So this is the first option. The second option is P11D form, year end form of P11D. Okay. So for non-cash benefits, non-cash taxable benefits, you have two options. The first is P11D, do it at the year end. The second thing is payrolling, like go with the pay. I just explained you. So let me show you the 2 points for requirement number C. Let me show you the 2 points for requirement number C. Income tax. See, this is the advantage. The first one is advantage, 1 mark, one advantage, and this one is disadvantage. Okay. Income tax would be collected on a real-time basis, so elite would have no unexpected liabilities. I told you there will be no surprise at the year end. There will be no surprise at the year end. There will be no surprise at the year end. There will be no surprise at the year end. Okay, right? But again, the disadvantage will be there would be cash flow disadvantage, that now payment will be due earlier than compared to self-assessment P11D. Okay, if you go for P11D, you can defer your payments, like all the non-cash benefits will be taxable at the year end. But in pay system, every month you have to pay, every month gradually you have to pay it. So in terms of cash flow thing, your cash will be stuck. So this is the disadvantage. Okay, already explained you, but this is the answer I can show you in the written form. So these were the two theoretical requirement of 4 marks. Now we have only one practical requirement. Stay active. You can do it easily. Even you guys can do it yourself. I'm telling you, just for your easiness, for your motivation, I'm going to solve it, type it for you. Okay, now just one last request, take the picture of this question. Take the picture of this question, because now I'm going to move the screen, and yes, I have the question with me, don't worry about it, but you guys need to keep the picture. Okay, so let's move to the sheet of. Okay, so dear student, respected student, you can see the spreadsheet here, but one thing, let me clarify you that in the exam you need to write all these theory yourself. Okay, in the examination you need to type all these things, but right now I have already ready-made typed it, because I want to save your time. Your last days are very precious. Okay, so 2 columns I have, you can see, because you need to calculate income tax. And I taught you, whenever you need to calculate income tax of individual, remember in Urdu I used to say insaan ka bacha. You need to, if you want to calculate the tax of individual, the 3 columns comes in your mind: non-saving interest and dividend, non-saving interest and dividend. Okay, As there is no interest income in this question, that's why I have ignored interest income. So two columns are there, non-saving and dividend income. In the non-saving, definitely employment income comes. So I'm going to calculate employment income right on this front screen. So the first thing is salary. How much was the salary for Vector Limited for the whole year? It was 68,000. So now 68,000 times 3 upon 12. 3 divided by 12. Okay. Let's do it here. Equal 68,000 into 3 divided by 12. Right. Now for approved mileage allowance, this will be 1200 miles multiply by bracket open 40 pence minus 45 pence. Okay, remember I taught you this. So this will be equal 1200 times bracket open 0.40 minus 0.45 minus 60. Remember this minus 60 I taught you in 2 steps when I was using the pen. Now come to the this first 3 months done. Now come to the matrix limited. What about the salary? Salary for the whole year is 82,000 times now 9 upon 12. So it will be 82,000 into 9 upon 12. 61,500. Now car benefit, remember the car benefit. The car benefit was 37,500 was the cost of car into I think 12% into 6 upon 12. Remember according to the rates. So this will be equal 37,500 into 0.12 into 6 divided by 12. 2250. Okay. Now accommodation, let's do working for accommodation. There is no fuel benefit for car because employer did not provide a single penny for fuel. See, this is the annual value working. So annual value, don't forget one thing, that this complete accommodation benefit we have to calculate only for 9 months. Only for 9 months. Okay. So annual value given in the question is 6,500. Times we have to do 9 upon 12. Okay. Let me do it here. Equal to 6,500 into 9 upon 12. Okay. Now market value should be used. Market value was 300,000. Less limit is 75,000. Remember in this question the gap was more than 6 years. So you will have the difference is 300 minus 75 is 225. Let me do it here for you. How are you going to do it? 300,000 minus 75,000. Yes. Bracket close into 2.25% into 9 upon 12. See, this is how I'll do it. This is how I'm going to do it here. This is how I've showed you the working. So equal bracket open 300,000 minus 75,000 into 0.025 2.225. Okay, and then you have into 9 upon 12, right? So 3797. So let's add the accommodation benefit, both benefits, and yes, we did 9 upon 12 for both. It's going to be 8672. It's going to be 8672. Okay, 8672. Right. So this is cell number 43C. Yes, it's C43. C. Okay, it's it. Now loan benefit. Loan benefit is very simple. Let me do it here. Loan benefit was, I told you, the loan was 15,000 into simply 2.25% directly. I've already explained you this, into 9 upon 12. Okay, let's write it. Equal 15,000 times 0.0225 into 9 upon 12. Okay, so this is going to be 253 something. Now calculate the total employment income here. Everything is done. Okay, so total employment income will be 89615. That's perfect. Now write the dividend income. There was a dividend income of 1500 in this question. Directly pick it up. Let's do let's do sorry, let's pick it up. This is employment, this is dividend income. Now my dear student, no need to make the total column. I have not made the third column, total income. There is no extra marks for that. Okay, so just use your common sense. 89 plus 1500 is something 90,000 something. So when your total income is 90,000 and something, when your total income is 90,000 and something, definitely your A and I will also be less than 100,000. Your A and I is also less than 100,000. So in that case, you will have a fixed personal allowance of 12570. You will have a fixed personal allowance of 12570, my dear students. So this is your final taxable income. You know, taxable income is the is the income on which you directly apply tax rate. And you guys are genius. You have done tax computation, my dear students. So now tell me, obviously first we'll compute tax on non-saving and then dividend. Okay, so this time you remember that you did the band extension. So 41,700 was your first band. 41,700 was your first band. Remember how I told you 37,700 plus 4,000. Remember? So the first band will be consumed and the tax rate will be 20%. Okay. So you will pick this. Listen to me carefully. You will pick this 77045 income and you will knock the first band. You will knock the first band. So first band, the updated first band capacity is 41,700. So yes, it will be 41,700 times 0.2, 8340. Now out of this 77045, just use your brain. Out of this 77045, you have calculated tax on 37,700. Okay, sorry 41,700, my bad. 41,700. So how much is left now? Now the excess will be taxed at the rate 40%, at the rate 40%. Okay, let me do it here. Equal, bracket open, this is 77045 minus 41,700, bracket close, times 0.4. See this? Okay, so finally we sorry, we have calculated tax on non-saving. Now let's come to the dividend income. So if you come to dividend income, so in dividend income, you have always, you know this, first 1,000 is your NRB is 1,000 and the rate is 0%, so it will be 0. And then finally the excess 500 dividend income, you know your first band is already consumed. Use your brain. Your first basic rate is already consumed. So now dividend will come in the second band. Okay. So 500 multiplied by 33.75%. 500 multiplied by 33.75, which is 168.75. Now finally our tax computation is done, done. 22647, this is your final tax. Okay, so nothing was difficult, nothing was difficult. A little confidence is needed. See, you have done the 11 marks. Okay, this is the reason why student scores 80s 90s. If you are serious, you have done proper practice, you have taken classes, I think there are very less chances to fail this paper. You can clear it because it's a practical paper. It's a practical paper. Plus now you have a lot of resources available with you. So if you like these classes, please comment on it. Please appreciate and share with your friends. I hope you understood it. Please have a look to all these things. Thank you. Take care and bye bye.